Hi, welcome back to Bazaar Morning Call. We have about less than an hour before the pre-opening rates kick in. The SGX Nifty is indicating that the start would be somewhere around flattish. The UK Prime Minister Theresa May's Brexit withdrawal deal with Europe has been rejected by the Parliament. May lost by 230 votes after lawmakers voted by 432 to 202 to reject this deal. Kunal Desai, the portfolio manager at Mobius Capital Partners, joins us now to discuss all this and more. Kunal, hi, good morning. We all know that some of these cues don't really affect emerging market investors, especially Indian investors. In fact, the day Brexit was announced, it was the best opportunity to buy. So just to get that out of the way, do you believe that emerging market investors should not worry too much about issues like Brexit?
Yeah, good morning, guys, and it's great to be here. Yeah, I completely agree. What we're seeing in the UK has obviously been the culmination of months of negotiations where there was very much uncertainty in terms of what the deal would look like and whether that would be ratified in Parliament. I think with emerging markets and looking ahead, there are other elements which matter much more than just political risk in developed markets today. And I would point to actually the differential or the rising growth rates in emerging markets relative to what we're seeing in the developed world. Now, when we look over the past 3, 4, 5 years, clearly there have been very strong performance in developed markets, in particular the US. And that's really been driven by the diverging growth rates between, say, the US and other developed markets and their emerging market peers. Now, thinking forward to 2019 and beyond, for us, what matters more is the resurgence in emerging market growth, and in terms of that divergence between the two beginning to narrow. So whilst headline noises will centre around what Theresa May is going to do next in the UK, and certainly it's going to be quite a messy couple of months back home in London, I think what matters far more from our perspective is the relative improvement in emerging market growth prospects.
Okay. Good morning, Kunal. Good to have you with us this morning. Well, there are a lot of things that's going on in India at this point in time. Aside from the results season, there is a poll season, and the poll promises are almost a race to the bottom. Does that scare an investor, this competing promises of larger and larger packages?
I think, the political situation in India is hugely interesting. It carries a huge amount of headlines. When we were out on the road over the last few days, it's what everyone's talking about. And when we cast our minds back to 2014, when we had that hugely significant election with the absolute majority of the BJP plus their partners, the significance of politics and the significance of elections then, for us, mattered much more than it does today. And really, it's to do for us, the India of 2014 is a completely different animal to the India of 2019. 2014, it was bloated by big two twin deficits. FX reserves were very low. The external vulnerability that India had was very high, which we saw in the 2013 taper tantrum. And India had almost lost its self-worth or its degree of confidence after years of policy paralysis, as the market called it. But now when we cast our minds to 2019, the prospects for India are so much stronger that I think actually the significance of this election over the next couple of months will actually wane in terms of its importance for the market. Now, when we think of the work that the current government have done, I think what sometimes gets forgotten, but certainly is remembered by the long-term investor, is some of the reforms which have been institutionalized. Now, when we have the elections and there'll be all sorts of kind of noise and excitement about what the coalition partners will look like, I think it's the institutionalization of some of these reforms that matter most. So actually for 2019, I think the relevance of this election perhaps is slightly lower, certainly than it was last time around in 2014. That said, what matters for us, and when you... sorry.
No, go ahead. A simple point was, I take your analysis of the importance of this election to the overall growth cycle and the institutions like an MPC, Monetary Policy Committee, that's been put in. But separately, the dangers to fiscal deficit, is that something that will worry investors at all?
Yeah. I think, the relevance of the fiscal deficit is the translation into bond yields and the cost of capital and how expensive financing becomes for individual companies that are either looking to raise capital or tap into debt markets. Now, what we saw over the last few weeks in terms of that welfare package, I think may have surprised a lot of investors, but you have to also be practical and relevant and understand that this is an election year, and there are a huge number of populists that have been struggling and continue to struggle. When it comes to the fiscal deficit, again, I think the growth matters so much more for India than a 50 basis point slippage in terms of the actual fiscal deficit targets. So for us, what matters more is the stimulation that the government can kickstart the economy, can look to broaden economic growth across not just a few pockets or subsectors, but to a broader exposure of the market. And for us, in terms of reducing the cost of capital, it's really accelerating growth within India, expanding the productive capacity, and allowing inflation, which it seems to be, far more controlled at a sustainably lower level.
So if you guys at Mobius Capital Partners decide to put incremental money into the Indian markets, where would your bias lie? Would you continue to put money into export-oriented sectors like technology, pharma, etc., or are you now looking at domestic capex recovery and some of the sectors like capital goods, names like L&T, etc.?
Yeah. So the first point is Mobius Capital Partners were set up last year. We've now got the license to be investing in India, which is why we've both been here for the last 2 weeks. And really, our focus will be on mid-cap and smaller-cap companies. So these are businesses between $350 million market cap to about $8 billion, $10 billion. And really what we're focusing on here are businesses which control the levers that generate profit growth, that generate book value growth, and generate cash flow growth. So for us, what's less interesting are the businesses which really take their price, which generate their revenues from the market. It's companies that have a degree of control, have a pricing power, that can have a degree of control, obviously, of their costs that they manage with their businesses. And this volume growth multiplied by their price growth, which they have, for us, will give them their margin strength and book value, cash flow, and profit growth. So for us, this tends to be more in the consumer-linked businesses. These are companies which obviously have the access of huge demographics across India and are moving from being regional players to much more pan-India players. And also businesses which are seeing a change in their business model. What we really are excited about is the way in which Indian companies are moving from being perhaps headcount growth, but taking out cost efficiencies from other businesses or competitors that either exist abroad or even their incumbents, the larger incumbents in India, but moving to businesses which are going to be far more led by IP, intellectual property. So companies who are thinking about investing today for their returns tomorrow. Now, classically, the markets tend to discount these companies because you don't tend to have as a high degree of revenue visibility or earnings visibility, and these businesses tend to get a lower multiple attached to them. But if these management teams are successful in creating these scalable platforms which they can roll out across customers within India and also abroad, this brings with it tremendous economies of scale. It allows them to move into new clients and, most importantly, sees margin improvement through operating leverage. They benefit from non-linear growth, where revenue growth accelerates without seeing the commensurate improvement in headcount growth. So these are the businesses which we're finding in the IT services space. We're finding these companies in healthcare. We're finding these companies also in financial services. Businesses which are looking to move up the value chain are investing conservatively today, but with the future returns and gains coming in the next period.
Okay. Kunal, are you saying you've got your permissions now? You'll have written your first check, bought your first share?
No, we haven't yet. We've got our permissions now. So very sadly, I can't talk specifically about the companies, but we've narrowed them down to a short list, probably about 20 companies. And in the next few weeks, we'll be deploying them into the market, okay. In which case I can kind of talk to you about.
Can you talk about a corpus?
Then.
I mean,
but
what's
yeah, it's something we're very excited about.
What's the amount that you're planning to put in now that the permissions are in?
So we're raising money at the moment in the UK and the US. We're getting a lot of traction in terms of appetite from investors. The key focus for us, though, is to scale up the business slowly, but in a conservative way. We're looking in terms of the target in mind of about $2 to $3 billion, which we're going to raise for this one fund. As I said, it will be a concentrated portfolio. We'll look to invest in 20 to 30 companies where we're very much long-term investors for 5 years. I would say that one of the most important themes of the companies that we're looking for is the improvement in governance and how businesses think about including all stakeholders in the way in which they run those companies. Now, because we're looking more at the mid-cap and small-cap part of the market, we're finding that a lot of companies perhaps haven't necessarily had the time to think of their governance standards as best as it can be. But we're seeing huge appetite from the companies we've met so far to think and improve independence of boards, to take on a dividend policy, to think about capital allocation and optimal levels of cash on their balance sheet. And most importantly, we're finding a lot of businesses where the second generation are now coming through and they're looking to take on their companies onto higher levels. And this really does interest us. I would say that both Mark and myself have been hugely impressed and very much positively surprised by the caliber of management teams here in India, and that very much leverages to the theme of governance improving, which in turn can re-rate valuations of these businesses northwards. So that's very much a core element of our investment theme and strategy.
All right, Kunal, we've run out of time, but thank you so much for stopping by, and all the best with your investments and your stay here in India. Well, that's the word coming in from Mobius Capital Partners. They're looking to invest into mid-caps and small caps.